Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook of November 26, tracking the pace of corn consumption. We've seen some weakness in corn prices over the last few weeks, mainly due to bearish market conditions in soybean and oil markets that have placed pressure on corn prices. Despite this price weakness, the pace of corn consumption remains relatively robust, and it looks like right now we're on track to hit the USDA projections for this year. Now there's a lot of uncertainty left in that, and today I'm going to go through some of the main categories and talk about the pace of consumption we've seen thus far this marketing year. Currently, corn exports are projected at 2.45 billion bushels by the USDA this marketing year. That's about 12 million bushels more than last year. And right now, when we look at weekly export inspections through November 26th, they're about 80% of last year's pace. Now, we got to remember, last year, the first half of the marketing year, we had a relatively sluggish export pace at about 28.2 million bushels per week. And then in the second half of the marketing year, it picked up substantially. And we've seen that carry into the first part of this marketing year. Now, there has been some weakness recently, but when we look at total commitments, they're up about 1.5% over last year. And we're definitely on pace to hit the USDA's projection right now. The big question is, will we see that kind of jump we saw after week 20 last year? When we think about corn exports in 1819, I think at current prices and plentiful supplies, we should still see strong corn exports for the rest of the marketing year. Feed residual use is another major category of corn consumption. What I'm showing in this graph is the quarterly feed residual use over the last 4 marketing years. As you can see, the first quarter is normally the largest. Right now, the USDA is estimating at 5.5 billion bushels of use. After the poor showing last year, it's understandable if some people are questioning this number. We really won't know until we see the December 1st stocks report, which will come out on January 11th. But, we've seen cattle on feed up quite a bit. We've seen a lot of hogs in inventory. And while we have seen these large inventories, we're still seeing very strong consumption, which is sort of mitigating some of the fears about the large supplies in the first quarter of 2019, particularly in the cattle and hog markets. Right now, it looks like we should see stronger feed use in the first quarter of 2018-19, but we really won't know until we get the December 1st stocks report. Corn use for ethanol is another major corn consumption category. What I'm showing in this graph is the total disappearance, domestic disappearance, exports, and ending stocks by quarter. This data is derived from the Economic Research Service and the Energy Information Agency. Basically, domestic disappearance is total disappearance minus exports. What you can see from this graph is the growing disappearance marketing year over marketing year, and a lot of that growth has been driven by exports. While we have seen some domestic disappearance increase, it's relatively mild. So if we're going to hit the 5.65 billion bushels of use USDA is currently projecting, we'd like to see another 1.635 billion gallons of ethanol exports in 18-19, similar to last marketing year, or even higher. Current oil prices and the pressure on ethanol production plant margins make it look like maybe domestic consumption will be a little bit flat, and we could see some ending stocks building. So it really looks like it's coming down to ethanol exports this marketing year if we're going to see any growth. We only got data for September, and it was a positive. We were up a bit from over last year, so we need to continue that as we move through the marketing year. But right now, it looks like we're on track, but the final number may be closer to last year's total use number when it's all said and done. Recent weakness in corn prices is directly related to soybean market prices and crude oil prices. When we look at the pace of corn consumption, we're basically on track right now to hit the USDA's projections, which would put us at ending stocks a little above 11% for 18-19. We have relatively robust consumption, but some of these other factors are weighing down on corn prices, and it doesn't look like that's going to change anytime soon. Now, any kind of resolution to the trade issue with China, I think, would provide support for corn prices, or if we could see some recovery in the crude oil market, that would help as well. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. Have a nice day.